Welcome to another session of Captive Corner. Today we have Stuart A. Feldman, CEO and General Counsel for Capstone Associated. Also joining us from the Feldman Law Firm LLP is Logan Gramillion, a seasoned tax attorney and holds a LLM in taxation, awarded by New York University School of Law. Today we will be discussing some of the tax issues and controversy surrounding the IRS's view of captive insurance companies and the requirements needed to stay compliant in the alternative risk planning area. Thank you both for joining us today.
Thank you. It's an honor to be here.
Thank you for the opportunity.
Federal income tax issues involving small captive insurance companies have been in the news lately. What is the nature of this continued business press reporting of tax issues involving captives?
Well, there are a number of things happening here. First, a Midwest-based national insurance brokerage firm is in litigation with the IRS in federal court. This just surfaced last year. This national brokerage firm acquired a Arizona-based captive services company 4 or 5 years ago that provides quote-unquote captive management services, which essentially are administrative services. No legal, tax, or CPA professional services are provided to the client by the Midwest-based broker, with the client left to secure these totally on its own. We've explained for years captive management services inherently require a delivery of complex legal services. For example, tax, regulatory, corporate, etc. Despite such, we've seen where the Midwest broker totally disclaimed, in its usual contract providing any professional services, legal, tax, or CPA services, leaving the client's work undone. To the best of our knowledge, there's not been an investigation of this organization for providing unlicensed professional services. However, the IRS has sued the Midwest-based broker in the United States District Court to enforce a subpoena, which essentially mandates the turnover of all its client files, and has obtained an order of the United States District Court ordering the wholesale turnover to the IRS of these files. These matters were previously reported by the trade publication Business Insurance on September 14, 2014. It appears the IRS's arguments are that the planning, spearheaded by the Midwest-based insurance broker, failed to meet the complex, lengthy, and involved requirements of an insurance company for U.S. income tax purposes. The service is now targeting the broker's clients. The long and the short is that the IRS is about to receive the voluminous files and likely will find deficiencies that will surface. A similar problem developed with another administrative services provider based in Orange County, California. The IRS, rightly or wrongly, has accused these groups of being tax shelter promoters.
In both situations, many clients apparently thought they were receiving all the advice needed to put the planning into place and to carry it out. Yet the contracts with the providers said that they only provided a limited range of administrative services. However, when implemented properly, captives can be a viable risk management strategy, as they have for the past 100 years in the U.S. and longer outside our country.
Thank you, Logan. Thank you, Stuart. Logan, do you feel the position of the IRS has changed?
We don't think it has. The IRS has challenged captive insurance arrangements from time to time for the last 40 years on various grounds. If the planning isn't done correctly, there is a problem. This is no different than if a defined benefit plan or a domestic international sales corporation is put into place. If the planning is done incorrectly, the taxpayer has a problem. In the case of a P&C captive, there are many moving parts. There are a lot of things that are needed to do the planning correctly. There also needs to be recognition that the entities spring out of the U.S. tax provisions which control the structure and operations of the planning. State insurance licensing is important, but the IRS is not bound by the findings of the state insurance department. There are hundreds, if not thousands, of captives which are regulated insurance companies that do not purport to be insurance companies for federal income tax purposes.
Many clients of the Orange County, California and Midwest-based administrative service providers may find themselves in unfortunate positions. But these tasks, that is the state insurance issues, the underwriting, and other insurance-related issues, are just part of the overall equation, leaving large gaps in the planning. These insurance-related areas, such as, again, the underwriting and the claims management, are areas in where the administrative service providers seem to focus, leaving the more technical tax, corporate, legal, and professional areas untouched and unresolved. Over the last 40 years, we've seen the IRS's interest in the captive area. For the last 15 or so years, there has not been much IRS activity. This period of relative dormancy was broken last year when the United States Tax Court ruled on two high-profile captive insurance arrangements, Rent-A-Center and Securitas, both decided, as I mentioned, last year.